Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Bitcoin topping and bottoming patterns using the time-weighted average price metric as a guidance. None of the content is financial advice. The chart that you are seeing on the screen is the daily price action of Bitcoin on the y-axis, time on the x-axis, and the time-weighted average price, which is this blue line that is the secondary y-axis, and the risk score of the time weighted average price is on the secondary y-axis. The price of the time weighted average price is still on the x-axis. So the risk is essentially between 0 and 1. 0 means close to no risk, 1 means maximum risk, and it's drawn in increments of 20% or 0.2 increments. So let's get started. Right now, the risk per the time weighted average price model for Bitcoin accumulation at around current price of around 108K on August 31st. If you look at the time weighted average price based risk score is at around 0.83. Historically speaking, if you were to divide this divide this cycle into components where price action has been very close to the time weighted average price, essentially the risk score is less than 0.3 at that point. Whenever the price action is sufficiently close to the time weighted average price, you can see historically in March 2020 as well, the bottom was at around 0.22 risk in terms of time weighted average price in from 2018 till about December 2018 till October, November, December 2018 till about April 2019. The risk of accumulation was less than 0.3. Again, as the price of Bitcoin goes up and to the right, the time weighted average price also has a positive positive bias or goes up with time as Bitcoin goes up with time, and it has a step function rise towards the end of the halving year and to between that to the end of the post halving year, like it did in 2017. You can see from here from event 2016 got over till end of 2017, early 2018. The time weighted average price has had a incremental step function rise, and not always it won't always be a step function, but it will as the market cycle gets heated up in the post halving year, it will have a significant rise in that year and then kind of flattens out the trajectory till the price action sees another post halving year like it did in November 2020 towards November December 2020 till when the time weighted average price was at around 4,900 to almost 2x towards the beginning of 2022. Right now, again, from that 11,000 in 2022, now the time weighted average price for Bitcoin stands at around 25,000. As this year concludes, again, this extrapolation, again, not a good idea, but if you were to extrapolate that, time weighted average price could well be somewhere close to 30K or even slightly higher than as the year 2025 commences. And if we were to take an extrapolation from the last market cycle, the time weighted average price towards the end of year 2021 was at around 11,000 and Bitcoin bottom was at around 16,000. So give it a 60%, 50 to 60% higher than that. So if we were to predict a Bitcoin bottom around 50 to 60K, if let's say the time weighted average price goes to $30,000 in 2025, and then in come 2026, again adding a 50 to 60% on that 30K level, that 45 to $50,000 could be somewhere close to the bottom. Again, the accumulation range in 2026 for Bitcoin could well be when this time weighted average price model, again, this model is available for free on the cryptoweeklies.com website, the link on bottom of your screen. It's under this Bitcoin related analysis. We have similar analysis for all of the major cryptos by market cap, and you can see there is a stark distinction between Bitcoin's journey on its time weighted average price and other cryptos. So for example, ETH did go lower than the time weighted average price in June 2022 as well as back not too long ago in April 2025, and that marked the bottom for ETH. Sol, again, not to distinct, again, has gone significantly below the time weighted average price in the bear market here. Again, similar story for XRP, ADA. You can see all of these charts are available on this website. Avalanche, again, still below the time weighted average price. That's why it's not gaining much traction right now in terms of the popular narratives. Link held this time weighted average price as a support twice in 2025 and couple of times in 2024 as well. Again, that's why it's one of the leading cryptos. You can check out what is leading right now. Again, these are the performance over the last 24 hours, 7 days, 30 days. So, link leading 90 days, again, link at the second spot. You can check all of these content on cryptoweeklies.com. You don't have to wait for a YouTube video for this one. Again, none of the content on this website is also financial advice. It's just data science, regression, and all of these models, risk-based models, to help identify what is fair valuation, undervaluation, etc. So right now, as the time weighted average price risk, if we were to just look at the risk and the price, historically speaking, again, as the risk goes higher than zero point 0.9, that's when the market has a chance of being overheated, and this color code shifts from orange to red. We haven't seen that. We came close 1, 2, and 3 times. Again, in March 2024, the time weighted average price risk was 85%. In December was at around 87% or 0.87. This time around in August, although the price was higher than previous two cases, the time weighted average price risk resolved at around 86%. That's because it's based on what the time weighted average price is at any moment, and the difference and the time, proportional and time adjusted difference between the price over here in orange color and the time weighted average price. So from 16k to 73k, the difference in terms of proportion was much higher than from 24k to 124k. So that's how it is calculated. So the time weighted average price risk has not reached 90% yet. It came close 3 times. Let's see if a prolonged presence in this area is slightly different from previous market cycles. So from previous market cycles, you can see, if just briefly getting rid of this price action, you can see that there is a distinction over here again, with one or two attempts trying to get to that 90% risk in 2017. Again, eventually got higher than 90% risk in 2021. Again, in the first attempt, from the lows of this risk, with a base at around 0.8, the price action shot up to the 0.93 risk early January 2021, and stayed there till, again, with this exception of late January 2021, stayed there for 3 to 4 months till about May 2021. And the next iteration, also in November, the risk did go higher than 0.91 in October and November 2021. This time around, there is a difference. Again, this area of around 0.85 to 0.9 risk has been acting a resistance for quite a while. There are 1, 2, and now third attempt to get beyond this. If it does not happen in the next 3 to 4 months, and the chances are, again, there are a lot of similarities between this cycle and 2017. You can see this drop in 2017 is similar to this drop over here, then a push to a higher low, compared, this is just time weighted average price risk based analysis, in September 2017 to this March April 2025, and now in potentially this, we are in somewhere in this area where close to that October 2017 time period, series of potentially higher highs on the time weighted average price, and then probably a blow off top scenario somewhere in November, December 2025. So coming back to the time weighted average price estimated bull run peak, again, just using the time weighted average price as a guidance, again, not all of the other models. Again, if we were to consider all of the models, again, that would be a problem, because the regression risk right now is only 0.07, and the models do consider and weight it a lot in terms of the regression based risk. Whereas if you were to exclude the regression risk and take an average of the time weighted average price risk and SMA risk, again, that would be 0.81 and 0.34. And if you take an average of these two numbers, roughly speaking, 0.8 and 0.3 is 1.1, dividing it by 2, it's 0.55 risk. And having that 0.55 risk as an weighted risk instead of the 0.34, that takes the price action, if we were to do a rough calculation, over the peak for Bitcoin. Again, this is again current price of Bitcoin at around 108k, roughly speaking 108.7 if we were to make it more accurate, 108k and $700, and then dividing it by the average that we talked about, the 0.55 risk, with the hopes that during the peak or the peak of the bull run, the risk, as we talked about, the time weighted average price risk going to the 0.9 level, if that happens, the price of Bitcoin could be somewhere around 177k, roughly speaking 178k. And that is one way to forecast Bitcoin's price action using risk models, and confluence among several risk models you can pick and choose. Again, we haven't configured this drop filter yet, but again, this website is always in development. If that feature is released, we'll make a dedicated video of that. Nonetheless, right now, again, if we were to look at Bitcoin from a regression perspective, again, the fair value this is the polynomial regression based fair value coming in at around $160,000. If we were to look for any residual peak for Bitcoin, a blow off top scenario where the market goes to that euphoria, like it went phase, like it went in March, April 2024, December 2024, and now potentially towards the end of year 2025. That blow off top peak where for Bitcoin could be around 250k. If not, if it just makes it to the fair value per this polynomial regression channel, if there is less steam in the market, that could take the price action to 160k. With that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.